Come back from a holiday like we are, many times the markets start off a bit slow. In this case, we have a pro gap up and go situation from Thursday's 4 o'clock close. We also have a dollar weakness trade that is continuing. You can see here DXY from our previous 2 Thursdays ago, highs to lows. We ran into a 50% retracement short here as we were coming out of our morning timeframes. And what we were watching for and associating this with, especially for the ES and NQ, was with a rally. As long as the dollar is weakening below this 101.326, the indices will rally. The indices will rally. When you're looking at the euro, the inverse of this, and remember that the euro is a 57.6% of the DXY chart, you'll notice that the euro is long setup. We were running right into it here this morning. This was also a previous low that we ran into. Old resistance becomes support, and that euro weakness trade is especially bullish for the ES and for NQ. Now that positive correlation that you can see here on the dollar correlations is currently, I think you could make a case here, very well established from the S&P and the NASDAQ perspective. But there's a positive correlation for the Dow and the Russell. And so what would we associate with that? Well, if there's a dollar weakness trade that's going on, we would expect the YM and the Russell to have trouble getting going. And it's exactly what you see here in terms of their price action. So we're anticipating that that is going to continue here as we go into this week. The financials are also still in an uptrend. Our targets for the longer term timeframes were completed, and there's room to actually make a pullback inside of this larger traditional measured move. That is another case that could be made here for the Russell and the YM having a little bit of a trouble getting going here if there's a larger pullback into their support levels. Ultimately, though, we're in a bullish above line in the sand at the 51.78. That takes us to our VIX. And this is where things are really going to get interesting here as we move forward into this week. Notice that the VIX's old contract lows to new contract highs. We failed to break out of a previous high, and then we all last week, starting on Monday, we had these short setups that we were in. And we're falling back into the original line in the sand to this long setup that you can see on the daily chart. This is a 12-hour chart. Let's go down to the 4-hour chart here. And how often does the VIX fall into 61.8% lines? Very often. In fact, it's probably more common for a VIX long to be stick saved at a 61.8% line than it is to bounce off its 50 cleanly. For whatever reason, that is a characteristic of volatility. It stick saves these types of levels. We do have to remember where we are in the intraday timeframes. And what we were, or how we were categorizing this uptrend on the indices and this downtrend on the VIX was it was short term and intraday. And the 50% retracement shorts that we have here from our Monday's highs to lows, we essentially came into a halfway back short for the week here on Thursday, coming out of our 1 o'clock time frame, is that target is right on top of that 61.8% line. We're also looking this morning to see if we would make another retracement here on the VIX. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.